there, this is Bharat Bhushan Grover, student number AGA2030, and I'm here to complete my assessment task for corporate accounting. The topic for my assessment task was raising funds for corporate operations and liabilities, provisions, contingent liabilities and contingent assets, and measurement basis of various assets for two companies. So for the two companies that I've chosen for this assessment is BHP Group Limited and Newcrest Mining Limited. These both companies are settled in Melbourne, and the first one, that is BHP Group Limited, is an Anglo-Australian multinational mining metals and petroleums. Those are the products that it deals with, and it has a revenue of around 43.64 US billion dollars, I would say. And the other one is Newcrest Mining Limited, which is also an Australian based, as it is listed on the Stock Exchange of Australia. It engages in the exploration, mining and sale of all the gold and the gold copper concentrates. The production output of this company is about 1.5 million ounces of gold each year. The aim of the base assignment was to compare the statements, the financial statements of both the companies, and to come out with the things that how the companies actually raise their source of funds. That is, whether it is debt financing or whether it is equity financing, or in other terms I could say whether the funds are generated internally or whether the funds are generated externally from the company. The aim of the report is to discuss the different sources of fund, the different liabilities and the interest bearing liabilities. Thirdly, the various implications of the accounting standards, that is AASB 137 in Australia. And last but not the least is measurement of assets, whether it is same for the companies or not. So the first thing was that I came across was the balance sheets of the company. So when I noticed the balance sheets of the company, I came across different cash flows. So when I calculated them, the cash flows from operating activities from the BHP Group of Limited companies is around $17,871 million in 2019, which was much higher in 2018 and a much lesser in 2017. So it's a bit up down kind of a situation for BHP Limited. While for the other companies, it was around 1487. So you can completely see that the company size is literally different. BHP Group Limited is a huge company, and Newcrest Mining Limited, though it is a huge company with a lot of employees, but it suddenly doesn't have a lot of funds to collaborate with BHP Limited. There are mainly two types of funds, that is internal and external. The internal ones include retained profits, sale of assets, decrease in the net working capital, while on the other hand, the external sources include sale of ordinary shares, preference shares, debt financing, venture capital and loan from bank or any financial institutions, etc. So both the companies were basically internally used internal sources of funds as their source of finances, which means that the percentage share of internal sources was exactly 100%. There was no debt financing at all in both the companies in the last 3 years, as the financing activities showed a negative balance in the cash flows of the company. So examining the evolution of the sources of fund, I would say both the companies are heavily dependent on internal sources, and both the companies have also observed that they are paying off their loans, they are investing in long-term assets, they are paying off their dividends well, they are repurchasing its shares, they're paying the interest, they have the interest bearing capacity. So the companies are relatively in a strong position, I would say. But when we talk about the percentage of the funds, that is, as I've told you, is 100% of internally generated funds for both the companies. Talking about the merits and shortcomings of internally generated funds, I would say the merits comes out to be that there's no dilution of control. As when you call up investors, they have a lot of interest in the firm and they get voting rights especially when they purchase your equity shares. The second one comes out to be they are free to purchase any investment, because when you have a lot of retained earnings, you have generally more funds to invest in any kind of investments or any kind of assets, long term, short term. You can invest anywhere without any hazard, and there's no one to question like where are the funds going or where they are not going, because there are no short shareholders, to be very frank. They're free to utilize their profits anywhere and anyhow they can use it. The next one is they are not worried about paying off their debts because the debt financing is not there. They are not worried about any interest to be paid. They are not debt holders. So they are kind of free-minded because they have to generate with all the functions in the company itself. They have a reduced cost of capital because calling out capital in any form, like in debentures or in any calling out from people, money lenders, banks, it costs a lot of money, not in just forms of actual monetary terms, but it causes a lot of headache as well. So there's a little bit of less headache when the sources are generated internally. Now talking about the other aspect, I would say the other side of the coin, as the cost of equity increases, then the cost of debt, it causes to pay higher dividends to shareholders. When the shareholders get paid higher dividends, obviously they feel more that they are more in control of the company. That can dilute all the controls of the company as well. Also in debt financing, they can enjoy the tax benefit that they cannot enjoy in the internal generated source of fund. The next part of the assessment is the critical examination of different types of liabilities in both the companies. The BHP Group Limited had all the liabilities, almost non-current liabilities and current liabilities as well. Whether it's trades and other payables, interest-bearing liabilities, tax payables, deferred tax liabilities, and any kind of provisions that they had. All the liabilities in BHP Group of Companies Limited was either current or either non-current. So they had hardly any issues regarding maintenance of liabilities. While on the other hand, Newcrest Mining Limited had a bit mix and match of liabilities. Like the trades and other payables were only current. They were not carried into the next year. They were paid off in the same financial year. The second one is the provisions. The provisions were both long-term, as the provision due to Samarco dam failure was a long-term due to the government provisions that they had in the year 2015. The borrowings were non-current because being a very small size company, not exactly a very small size company, but relatively a very small size company as compared to BHP Group Limited, Newcrest Mining Limited had non-current borrowings that they paid off their debts in more than 1 year. The other financial liabilities in case of Newcrest Mining Limited were also current and non-current at the same time. Now further talking about the critical examination of the key provisions of the AASB 137, that is the Australian Accounting Standard Board's 137. The paragraph 10 explains the meaning of provisions. The meaning of provisions is that it is the liability of uncertain timing and amount. The paragraph 14 states that the provision is recognized when an entity has present obligation which arises due to a past event. The paragraph 10 also describes about the contingent liability, that it is a possible obligation which will exist due to the occurring and non-occurring of one or more uncertain events. Due to the higher level of uncertainty, they are not described in the balance sheet of the company, while they are just described into the notes of accounts of a company. Furthermore, the contingent assets are all the possible assets that arises from past events whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events. The business must have to keep provisions for constructive obligations which arises due to pattern of practice of a business. And the next task, continuing with the next task, it was regarding the references of the same act under different liabilities for the firm. The first one comes out to be the employee's benefit. The employee's benefit has a constructive liability as it is a definite benefit plans. It is a constructive obligation under the company as it defines the provisions for wages payable, leave encashment, post-employment benefits and retirement benefits. The second one is provision for Samuel dam failure. The provision for Samuel dam failure came out to be a legal proceeding under the government rules as it is a dam failure that occurred in Brazil. So to help out all the companies in attaining all the information from different countries and to maintain their relationship, the government started this scheme. So both the companies, I would say BHP instead, has to maintain this provision under these AASB 137. The third one is mine rehabilitation. The mine rehabilitation is a constructive obligation again. It is to restore the place where the company has made its operations. For the Newcrest Mining Limited, only the employee benefits and the mine rehabilitation continued under the AASB 137. Continuing on to other task was the classification of the assets and measurement of different types of assets. The classification of assets contained all the assets for the company, whether it's current and non-current assets, cash and cash equivalents, trade and other receivables, inventories, financial assets, properties, intangible assets, and deferred tax assets. The measurement of these assets is a bit tricky part that we are going to talk about, as the measurement of assets is based on cost, amortized cost, fair value, net realizable value. While the trade and other receivables were valued on fair value, the inventories were being valued on net realizable value. Other financial assets are being valued at the fair value. The property, plant and equipment is initially measured at cost, but later on when we use it for subsequent years, it is usually measured at a cost less accumulated depreciation and impairment losses of the assets. The fifth one is intangible assets. The intangible assets, such as goodwill, is usually measured as the difference between consideration paid and all the assets, liabilities, and contingent liabilities acquired while purchasing a new business. It is the subject to impairment review. In this case, the goodwill is recognized at a cost less impairment. Talking about deferred tax assets, it is measured by multiplying tax rate with the tax deductible temporary differences. So, coming out to the conclusion of all the assessment tasks, it can be said that it is not possible to take decisions if an investor does not have a proper understanding of the annual reports. A proper understanding of the annual reports is very necessary to take any kind of decision. Being an investor, I would say, comparing both these companies, BHP Group Limited had a bigger impact on me to invest the money. While the Newcrest was also good, but the statement of financial positions of Newcrest Limited wasn't a sound statement for any new investor or for any kind of investor. The analysis should be made for the companies within the same industry. That's what I have done, because taking two companies from different industries would mean different kind of assets, different kind of liabilities, different kind of balance sheets for me to compare. So just to make the comparison easier, same field was chosen for both the companies. Thank you.